interest. Now, throughout your life, you're going to either pay interest or earn interest, so I want to go over what the difference is between simple and compounding. First, simple interest is a fixed percentage of the principal amount that was borrowed or lent. Interest does not accrue and get added to the principal. Whereas, compound interest accrues and is added to the accumulated interest of previous periods. So borrowers must pay interest on interest as well as principal. Let's look at a couple examples. First, a simple interest example. Loan of $10,000, you have an interest rate of 5%. Over a 12-month period, you will earn $500 worth of interest. Now, if that loan was a compounding interest, you would still have the same amount of the loan, $10,000. You'd still have an interest rate of 5%. However, the total interest would be $511.62 because it's being compounded. So, when borrowing or lending money, make sure to understand if the interest will be simple or compounding. That was pretty simple to understand. So now what is the difference between interest rate and APR, as you will see these terms when you borrow money? First, the interest rate refers to the annual cost of interest on a loan only to a borrower and is expressed as a percentage. The APR is the annual cost of interest and fees on a loan to a borrower. Like an interest rate, the APR is expressed as a percentage. Unlike an interest rate, though, it includes other charges or fees such as mortgage insurance, most closing costs, discount points, and loan origination fees. Let's look at an example. Let's say you have a loan of $10,000. The interest rate is 5% and the loan term is 2 years. The total interest you're going to pay on that loan is $1,000. Therefore, you're going to have a 5% interest rate. However, you also have admin fees of $200. Therefore, your APR is going to be 6%. As you can see, the annual rate for the APR is higher because it has $200 of added fees. When borrowing money, it's important to understand what fees are being tacked onto the loan so you fully understand how much it's going to cost you. So don't confuse the interest rate with the APR rate.